All right. All right, guys, welcome. Can you guys hear me all good? Sweet. All right, let's get started. So, welcome, guys. I haven't done a YouTube live stream before. I thought I'll give it a go for tonight, try something different. So, just want to give my point of view on Bitcoin right now. I think we're coming to a really interesting point in time. So this is the weekly chart for Bitcoin. We still have 5 days left until the close. And I think it looks really interesting now. I'm sure there's going to be some people out there who are going to refer to this as a potential like head and shoulders pattern or something like that. And what I'm going to say to those people is that if you got to look at the monthly chart for a much clearer picture of how that candle is developing. So this is the monthly chart. And I know we still have 15 days left till the end of this candle, but just having a look at it from here, it doesn't look like this weekly is going to be a head and shoulders just because of this monthly candle. It looks like that's a potential bottom candle. So we're going to see potentially see a bit of a push here to test the upper resistance areas. So the monthly is bouncing pretty much off the zero point 0.5 kind of fib area, and now we're right on the 0.618. So the 0.618 fib is like a strong resistance. And while we're underneath that area, as you can also see, it was kind of the resistance over here as well. So while we're underneath that area on BTC, a rejection is possible here. And that might form something that looks like a head and shoulders, but I don't think it's it's likely to play out. I think it's going to get rejected if that happens. Now let's go over some other things right now. So for those who have been following me, obviously you know I've been posting about this Wyckoff idea here for quite a while now. And I've had a lot of questions from people the last couple of weeks asking me like how to identify this and what certain parts of the Wyckoff range mean. So I'm just going to go over how I identify and draw these really quickly. So I have this is a reference image. So this is a Wyckoff accumulation. As you can see, the price just pretty much moves sideways between this horizontal range, and towards the end of it, we have this kind of spring area where the price goes underneath the support, quickly comes back inside. That's number 8. and then that is number 9, jump across the creek, before we have the potential breakout of the range. So when you're trying to identify one of these ranges, the biggest advice I can give anyone is just don't overthink it. Like, I always start off on the higher time frames, the monthly, weekly. On the monthly and weekly on Bitcoin currently, we can't see the trading range, so we're not going to work with these support and resistance levels. If you want, you can put in this resistance here and this one down here, but other than that, the rest of them, there's nothing really useful there. So the daily, it's still not very clear, so we'll go down to the next one, and now we're on the 4-hour. So now we can actually get a really clear picture of this trading range. And even though it doesn't look perfect, we can still see that the price action it's working quite well. So I've drawn those 2 levels from the weekly because they just looked, they were significant and they looked right. And now we're on the 4-hour, which is where we can clearly see the trading range. And we're going to add some more detail to our chart and put in some more levels. So up here, I'm going to select, because this was a very strong rejection. And that rejection actually led to this downwards movement. So we're not going to leave that off our chart, that little area there. We also have, we've got this area here that comes down to here. We can brighten this up a little bit. And we have this kind of support area here that comes down to here. So this is pretty much it for me. Like, there's like a couple little other support areas if you want to mark in. I think less is more with these Wyckoff charts. So now we've got our range, we've got the support and resistance areas marked out. You can go to the daily or the weekly and you can see it looks like it's covered most of those kind of areas that the price is swinging from. So we're not missing any important areas. We could even like put in these ones up here if you really wanted to. On the object tree in TradingView, so if you go to the bottom right of your chart, you've got your object tree. This is where you can create folders to organize your ideas and stuff like that. So I just put in Wyckoff support and resistance. And now I've got previous levels here, so I'm going to open up my Fibonacci levels and just have a brief look at the Fibonacci levels. So what I've done here is, if you go to the BLX chart, this is the historic chart of Bitcoin. It's from the start to finish. So all I done was draw the Fibonacci, all the different Fibonacci levels, and I writ down the price of each level, and then I went back to my normal BTC chart, and I just added those levels to this chart, so I know the long-term Fibonacci support and resistance areas for Bitcoin. So just looking at this chart, you can see that we've bounced off one of these Fibonacci levels down here, which was also a key support over here. This is a 1.618 Fibonacci, and it's drawn from the $20,000 high to the start of Bitcoin's history. So that's the current support, and then that leaves the next Fibonacci resistance, which is at 44,560. So I've got those levels on my chart. That's going to give me potential targets for my Wyckoff range. I've got my Wyckoff range, and now I've got some other things I can also add to give me more detail. So I've got my news events, and now this is all the kind of key moments in the last couple of months or 6 months, whatever, that has happened to Bitcoin, and I've marked them on each particular area on the chart, just like so. So this is gonna, I know that now obviously we've got support and resistance areas, but these areas where the most important and market moving news happens, they tend to be the most significant parts for the price to land on. So just going by that, for this Wyckoff here, our next kind of significant area is going to be at 44,500 or so, because first of all, this is where the China banned Bitcoin news kind of came out. I think it was over here. Here was the first one, and here was the second one. The China bans Bitcoin. So I think just going from that, that is going to be our most significant resistance area to overcome if we break out of this Wyckoff, potential Wyckoff range here. So now that we've got all our potential areas mapped out in the chart, we know we've got the 44,500. We also got this area up here. Tesla no longer accepts Bitcoin, which is around 57K or so. And we've got this area here, which was a very important rejection as well at 51,400. So we know the kind of key areas where we want to be targeting if we start to uptrend again. Now let's go back to this Wyckoff range. So I've marked out my support and my resistance areas. I know my potential target areas above. I've got some support below me, and now we can just identify the range. One important thing I'm going to teach you guys when you're learning to trade these Wyckoff ranges is that, you know, a lot of people find it confusing because there's so many different characteristics and different like things to learn, but it's not that important. Like, the most important thing about the Wyckoff range is the start of the range and the beginning of the range. The middle of the range, it's just noise. Like, it doesn't really matter. So you have the selling climax, which is, sorry, I'll just start again. We're actually, the first thing you have when you have a potential Wyckoff range is the preliminary support. So we can go onto the hourly for this one to get a better look. And the preliminary support, all it is that when you have a downtrend, the preliminary support is the first time in the downtrend where the price actually starts to head upwards a bit before the selling climax. The end, that's SC, selling climax. That's when the end of the downtrend. That's when the selling completely stops. The selling climax, it usually has a pretty large kind of wick. It doesn't have to, but it usually does, especially on Bitcoin because it's highly volatile asset. And it has a lot of volume. There'll be extreme. I don't use volume in my analysis, but if you, sometimes I have it on the chart just to have just a quick look. Just a second. Here we go. So you can see in that part of the potential Wyckoff range, we had the extreme amount of volume here on selling and buying side. So that was the likely bottom, short-term bottom. So yeah, preliminary support, which is PSY, or PS is preliminary support, PSY is preliminary supply. So you can see that we were downtrending strong here, and then we've had a first little bounce here, and then that led to the selling climax. So that is the start of how we identify a potential range. That's the first thing. Preliminary support phase, it usually looks like a bear flag. Now, this was really volatile in Bitcoin. It was swinging really crazy, so it doesn't look like a traditional Wyckoff range, but you can see we come in and we started to make that what looks like a bear flag that broke downwards, and then we started to go sideways. Most of these Wyckoff ranges, they start with something that looks like an order block or a bear flag before the selling climax. After the selling climax, we've got the AR, automatic rally, number 3, which is where price literally goes straight upwards from there, and then it rejects, and that forms the top of our range. And then from there we have our support test or secondary test. We have another secondary test which knocks out this last support test, and then this area is actually forming the basis of our range. So this is why I'm trying to tell you guys the middle is not that important. We want to find the start, so we know we're in a range. We know we're in a range now. And then we have the middle bit, and that leads to the most significant part of this particular accumulation, which is the spring. which is when the price goes underneath. It doesn't have to go right underneath. It can just go quickly underneath a support area towards the bottom of the range, and that stops out a lot of traders generating liquidity for the next up move. So you can see on the image we've got 7 spring and 8 ST. So we've got spring here, and then 8 ST. So 8 is when it just confirms back inside the support. This is the support here, and you can see we've had the confirmation inside. I'll keep going through the other parts of the image. So you have 4 and 5 ST, which I've got 4 and 5 here. And then after that, it's not important. We just have to watch the price. It should just continually respect the range. What I've noticed is that inside of Wyckoff, any Wyckoff range, you have these kind of head and shoulders in the sideways trends. And a lot of these do tend to eventually fail, and you can trade these as scalp trades in between the ranges if you like to do so. So eventually the price keeps swinging through the range, and that leads us to the phase C. Phase A is when the range is formed. Phase B is when the price swings between the range. And then phase C is the starting at the final rejection before the price goes underneath the support. Once the price goes underneath the support and you have the confirmation at 8, that's going to lead us, as you can see, phase D. And phase D is when we actually start switching from a sideways movement to an uptrend. So as you can see, after 8 came into picture, we had the spring. We started to really uptrend really strongly. And this is, some may call this the jump. This is the next important part of the Wyckoff. After you have you can see 7 and 8 spring, we have the jump across the creek phase. And now the jump across the creek phase is important because that's going to be our confirmation that we know we're in a bullish accumulation, a Wyckoff accumulation. So how do we identify the jump across the creek? Well, it's really simple. The creek is just an imaginary downtrend line that you draw from each high, like so. Now we can see towards this point here, the price actually shot through this imaginary downtrend line. Some people use the EMAs, the moving averages. I just draw a line. I don't even draw it sometimes. I can just see, like I can see pretty clearly over here, we have completely jumped across this line. Even if we drew the line like so, and we dragged it to this point, we still jumped across here. So we know that at this point or at this point, we had the jump across the creek. As you can see, we've got the little imaginary line here, and that is where the buyers are finally in control of the market. They've overpowered the sellers, and now we've jumped across the moving kind of line, showing us that this spring down here is in fact a valid spring, and we have the chance of continuing. So now that we've had our jump across the creek, what do we have to watch out for next on this Wyckoff range? So you can see right now it's already looking like we're starting to reject here. I was expecting something like this to happen, but we just don't know. We just don't know exactly how it's going to go down from here. I'm not in a short or anything. I wanted to get a short entry to potentially scalp from up here down to here, but first of all, it looks too bullish still. It looks like a bull flag or something like that is forming, or you know, it could be a flag like that, and we just pump. I don't think it's worth the risk to short just yet. I'm waiting for some other signs. What I'm going to be looking for on the next play of this Wyckoff is we're either going to come back to support down here or come back to this support over here. This was a preliminary support. So this is where we first had a few little upswings. So we can mark out these areas. I don't use the horizontal for this because it drags across the whole chart. I like to just take a line and just draw it like this. And I put it green, and the green for me just signifies that it's the last point of support. So a place where the price increased from recently that we can potentially see another breakout of this Wyckoff range. So pretty much like I've got these support areas down here. I've also got this one over here, and I've got this one here and here. So that is the last point of support. That is a place where the price increased from. So what's the next phase of the Wyckoff? 11 LPS. We need to jump across the creek, which we've done. And now we need to come back and we need to bounce off the last LPS, last point of support. So that could be down here. We could continue to make a flag and bounce. That could be down here. We get some bearish news. A lot of people panic once again, and then it's a massive bear trap. And then this last point of support is the bounce. After we see a bounce from one of these areas, we're going to look for another movement like this, a strong bullish movement. That's going to give us the number, sorry, the numbers are mixed up on this image. Number 10 is a sign of strength, where we have a strong push outside of the range, and then we have the LPS phase after that. So this is a sign of strength. We've come back, we're making another LPS, and then we're going to have, we have the next sign of strength and the next LPS. So another sign of strength, and that should take us to the next support here or here. Just mark one line, and then we're looking for another bounce off that as the secondary confirmation. And that is the beginning of phase E. Phase E is when we enter the strong uptrend. So that's just my overview on how I identify the this particular accumulation. Now, one more thing I want to go over for you guys is how I identify my levels when I trade. So I'll just clean up the chart. I'm going to start with it. Let's look at Ethereum now. So let's have a look at Ethereum. What I'll do is I'll just delete my whole chart and I'll start from scratch just to show you guys how I pick my levels. Alright, so I always start with the 1 month chart, and I start by drawing my Fibonacci all-time high to all-time low from any major kind of areas that I can see. Now, after I've done that, I will draw my order blocks and kind of supply and demand zone, stuff like that. Alright. So yeah, we've got the top monthly order block. And I draw my other order blocks here. And then from the start and finish of every major monthly candle, I draw zones as well. And then that's pretty much all I do for my monthly chart. So now I go down to the weekly, and you can just do the same. Like, you just fill in with more detail each area where you think significant bounces and movements happen from, like so. And eventually it's just going to give you like I call it a mind map. It's just a map for me of the different areas where historically the price increased and decreased from. And eventually when you zoom in on the 15-minute, half an hour, 1 hour chart, whatever it is that you trade on, you're going to get something like this. And then when you see like chart patterns like inverse head and shoulders and you know, Wyckoff accumulations, bull flags, stuff like that, when you see them rejecting from these areas as a bearish pattern, they're definitely more likely to play out. And when you see bullish patterns bouncing off these areas, they're more likely to play out bullish as well. So that's how I use my levels. Depending on what chart you're using or what the candles look like, every single one is different. For example, this is Solana paired with Bitcoin. So you can see on this monthly chart, it's not as detailed as Ethereum. We don't have as much to work with, so we can probably keep it more simple. Same thing, I do my all-time high to all-time low fib. And I just mark out all these kind of key areas I can see. Let's move down to the weekly. Now you can use color coding for the different time frames, which is what I usually do. So I pretty much mark any significant area where the price rejected from. And if it gets like to the point where there's too much clutter on my chart, then I'll use less of the zones and I'll use more of these horizontal kind of levels, like so. And I just try to get a covering of all the kind of key areas where the price has kind of reversed from. I group them up. So 1 month and 1 week. Depending on the chart, some of them I do the 1 day levels as well, depending on how much clutter there is. And for example, on this one, I don't think it's really needed to do the 1 day chart, because if you look at it from this perspective, maybe you could just fill in a little area over here like that, just so you're not missing this top area. But other than that, you can see that nearly every major kind of area is pretty much covered with this chart. So I will chart just like this. I won't add anything else to this. And every week or two, I just go over it again and I check if I've missed any important areas and stuff like that. So this is a trade I just went over with the guys. I just went over in Discord before, and we're also on this trade in the auto trader. So you can see Solana, it's actually pretty much doing the same thing 2 times in a row. We had like an ugly head and shoulders pattern, and we went bearish. Eventually, we bounced off that exact neckline, and now we've done the same thing. We've formed an ugly head and shoulders pattern. We actually had a breakout of this head and shoulders here, but we failed. The breakout has led to nothing. It's now back inside of this support area here, and it's bouncing. There's a couple consecutive strong green candles. I think we have a very high likelihood of this head and shoulders pattern here failing now. And you know, that was my trade. I'll just bring up the screen really quickly. And this is the auto trader, so you can see this is my trade earlier today on Sol BTC. 0.01 was the entry, and the stop loss is at 895. So the stop loss is just underneath this area under here, this wick here, which is also underneath this area here, and this little resistance. You can see there is a resistance right here. So I've put my stop loss underneath that, and I've put the entry up here, targeting the up. You can see the clear resistance up here. Pretty simple, really simple trade. Most of my trades, that's all I do. Like, I'll just go on my monthly chart. I'll identify my levels, go to my weekly, identify the next levels, check out my daily, and then I set my alerts on these lines like so. And when the price comes to these important areas, I get a notification, and then I look for chart patterns. Depending on the pattern, like this head and shoulders, as soon as I saw it was back above this area here, I was in a trade. I don't hesitate, and I don't use any indicators or stuff like that to analyze. I just wait for the price to do what I'm looking for. If I see chart patterns, whether it's a head and shoulders or a falling wedge, whatever chart pattern it is, a lot of these patterns have bearish breakouts, and when the price gets back inside of them, it's a really good long opportunity. So I just trade based off that. I look for an entry candle, like a bullish engulfing. On this one here, I entered because of this pin bar candle. That was a failed breakout, and we also had a secondary red pin bar here with a second green candle that confirmed the bullishness inside of the range. So that is just the basics of the Wyckoff accumulation and how I identify my levels. If you want to trade like this, then one thing you have to keep in mind, it's just a process of elimination. So if you got a long entry down here, for an example, and now we're above here, it's really simple. When the price comes up to this area, process of elimination. If we can get above it, we can expect it to go to the next area. If we can get above that, we can expect it to go to the next area. So by process of elimination, we can see which area the price is likely to visit next. For example, if we went up to here and we had a strong red candle from here, we can probably assume that for the time being, we're not going to get above that area. Just like if we did the same thing falling underneath this range, we know that most of these areas here are now unlikely, and the likelihood is going to be for the price to head downwards to here. So that's going to be it for me, guys. I just wanted to give a really quick update on BTC at the moment. Ethereum, I'll just look at really quickly as well, because it's not looking as strong as Bitcoin, which is pretty interesting. Now, we don't know what's going to happen here. It could just be an accumulation where we continue to put in higher lows. So higher lows, and higher lows, as you can see in the bull market, we just continually put higher lows and head upwards. So right now, Ethereum is still continuing to put in these higher lows down here, giving us a sign that we could potentially head up still here. But I just don't like how, if you look at Bitcoin, on Bitcoin we actually came down and we tapped the support before moving up. On Ethereum, we never did that. We never came down to this support. This could be like an accumulation still. There's no rule that says it has to touch the support. For example, I'll just look in the Discord here. So we've got the Wyckoff materials. So in this schematic, this Wyckoff range, we have the example where the price never goes underneath the range. It never has a spring. We've got selling climax, secondary tests, support tests, whatever. And that eventually it just keeps making higher lows, and then we have the jump across the creek. We never get that spring. So that is a possibility on Ethereum here. For if we wanted to draw something like that, like for example, I don't even need to change my chart here. I could probably draw one little area here if I wanted to make it a little bit transparent. And look, every other kind of support level is pretty much covered here on this chart. So we could say, this is selling climax. You can actually see right here, this is a strong move. This wick here is the first selling exhaustion. So We can mark that as our preliminary support, right? This has got the ST that comes right up to the automatic rally. We have another ST here. So now you can see we've actually formed the trading range from here. So we've got our support here, and we've got our main resistance of the range is up here. So after we have our ST, we've got one more ST. And now what we should see is if this is this particular range here, this number 2 new schematic of accumulative gradient of rising bottoms, is that we should see the price kind of do something like this. And then we're going to have a jump across the creek like that, where we continually make the higher lows, and we never actually get underneath this area again. So the confirmation, one important thing I've noticed about this image here is towards the end of phase B, we have it looks like an inverse V almost. So you can see that over here, and I've got another example to show you guys. So this is like my database of charts. I've got hundreds and hundreds of charts. Every time I see a Wyckoff, I document it, and I keep them just to study later on. So let's have a look here. Here we go. Oh, sorry, that's a wrong example. Actually, just a second. TRX. Here we go. So in this let's pull up the chart actually. So in this example, you can see we have this is the first kind of up move in the downtrend. Sorry, the last up move before the selling climax. We have our selling climax, automatic rally, support test, and then support test again. This takes us over here, and then we have the jump across the creek here, which is where we had a very strong amount of volume and buying. And then we had as I said in this image, we make an inverse V, right? So in TRX, we actually made that here. And then we continued to make higher lows before we had the eventual breakout of this range up here. This one really dragged out for a while, but you can see that we continued to bounce off that last point of support area until we had the breakout at the end of the range. So looking back at Ethereum, so I'll just bring up one more image. So we also have this here. Now these are the same images. These are both number 2 schematic. They're just drawn a little bit differently. They both represent the same thing. In this image, it's actually like the makeup of inverse head and shoulders pattern, basically. So you can see we have selling climax, and then this support test actually goes underneath the selling climax, and then we have the last point of support. So we have the selling climax, and the ST goes under it, and then we have the last point of support. And then from there on, as you can see in this image, we have the sign of strength and the LPS, etc. So we're looking for, on Ethereum, the confirmation. We're already starting to push towards the upper boundary of the range. We need a strong move, like a strong up move to show us, yes, this is a accumulation, a bullish range. And then we need to see the price come back to one of these last points of support over here for a bounce. If we see that, then it's going to be a very good sign for Ethereum. Or we're wrong, and it's going to be a spring. You know, we haven't had the spring yet. We come back, test this, start to go up and down in the range before we get the spring phase like so. So yeah, that's going to be it for me, guys. I wanted to just do a video to give you guys a bit more insight because I've been having a lot of people ask me about the Wyckoff ranges as of late, and I'm going to be doing some more videos like this to give you guys a bit more knowledge on the topic. So stay tuned.